So one of the things I'm always telling you about is opening up extra current accounts to take advantage of all the different perks, whether that's free cinema tickets or high interest linked savings accounts, or the biggest of them all, obviously, is switching over from your existing or one of your additional banks into a new current account in order to get that free switch in cash. And it's a great way to get those extra money into your bank account every single year and do it multiple times. Open up a number of these different accounts, and it can be really, 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 with a little bit of admin behind you, can be really sort of lucrative. I mean, I can't remember how many current accounts I've got right now, but I've got a lot of them in order to take advantage of these different kind of perks. But something you need to be aware of here, I do mention this whenever I talk about the different switching deals, but it's a question that pops up again and again, so it's worth sort of spending a bit more time on it, is the impact that opening up a current account or switching your bank account has on your credit report and your credit score. Because although it can be relatively minor, there might be some situations where you want to maybe hold off and not open up accounts or not switch accounts. It's worth you understanding that bigger picture before you kind of get too carried away and start doing loads of these all at the same time. So first of all, let's kind of go back slightly and let's just very quickly give you the headlines in terms of your credit report and why it matters. I have got loads of other content on this, so you can watch those and listen to those and read those things on YouTube, on the podcast, on bigcleveryourcash.com to get a better understanding. But basically, the principle here is you have something called a credit report or a credit file. It's the same thing, just different names for it. There are actually three of these different ones, three different credit reference agencies that collect this data. But it is effectively that. It's your history, right? Sometimes called your credit history as well, isn't it? This is all your kind of current accounts, credit cards, mortgages, loans. A lot of your utilities are in there. Savings accounts, they're separate. They're not going to be in there. But broadly, this history of all these products that you've got and have had in the past. And this is used by different lenders and different banks and different companies to assess whether they want to give you whatever product is you're applying for. Again, out of those things we spoke about before, they'll have a look and potentially they might think we don't want to give this person because they've got a history of missing payments or whatever it might be. Or there might be some inconsistencies on there, or there might be some mistakes on there. But for whatever reason, they use that as help as part of the decision-making process, whether they're going to give something to you or not. The credit score is obviously linked to this very clearly, but the credit score is basically just an indication of the health of your credit report. So the score itself doesn't matter so much, but if it suddenly drops a huge amount, then that would be an indication that potentially there's something going on in your credit report that you might want to action, or something you've done that has caused that to fall down. So that's kind of where they are. The report and the file are the most important thing, but the score is a great little indicator of how things are going. Now, bringing it back to opening up a new current account and to bank switching. Every time you apply for one of these accounts, the bank will be looking at your credit report, and in the vast majority of cases, it will be doing something called a hard search on your credit report. And a hard search is where the fact that they've made a search will appear on the credit report itself. And that can be an indicator to lenders that they let know someone has applied for credit. They don't know necessarily what type of credit it is just from saying there has been a search on the report. And that sometimes can be seen as a negative thing, particularly if there are a number of these in a short space of time. And we'll come back to that a bit later on. So that is where the majority of why opening up an account will have, in most cases, the big impact on your credit report. Some of them will do something called a soft search, and we'll talk about that a bit later on as well. A soft search is where they look at all the information, but that fact that they've looked at your credit file doesn't appear on the credit file. Okay, so they're absolutely fine. You can do loads of those, and it's not going to cause any issue. It's the hard ones that we need to think about. And those hard ones will remain on your credit file for a year, for 12 months. So how does it impact you when you're opening up? When opening up a bank account can actually hurt your credit score. Just opening up one isn't going to really make much of a difference. Yes, you'll see your score probably drop a little bit in the immediate impact of opening up a new current account. But broadly speaking, that's not a bad thing, because if it was, we would never apply for anything. And that includes like mobile phone contracts, doesn't it? And mortgages, things that we do need. So I wouldn't worry about that too much. Open up a new current account with a hard search. Okay, fine. The problem becomes more if you are doing lots of hard searches in a short space of time, whether that's multiple current accounts. And I've seen you guys before when there have been lots of bank switching deals appear at the same time, doing both at the same time, 2 or 3 at the same time. Or it could be you're also going for a credit card and you're also going for when you move house, you've got to get a new energy provider or whatever it might be. All those kind of things. And once lots of them in a short space of time, that can be seen potentially, even if they're not even looking for credit, like our credit cards, as lots of applications. They're desperate for credit potentially, and that can really bring your score down a lot faster in a short space of time. Even if, that will recover, from they're on there for a year, these hard searches. So it's something to think about. If you have anything important coming up in the next 6 months or so, not doing any additional applications. When there's something important, it's stuff that you really, really need to be accepted on. You do not want to have these hard searches negatively impacting your ability to get that product. Most likely here, we're talking here about maybe a remortgage or a mortgage for the first time, or maybe you really desperately need sort of a 0% balance transfer credit card, something like that, which is going to be much, much more important than, getting some freebies on a bank account or the switching cash. So that's the main thing there, is kind of spread things out. Don't do too many things in a short space of time, particularly if you are worried about or have a big application coming up. Now, it's not to say you can't do things in a short space of time. I've certainly, personally, in the past, have had 2 or 3 credit checks taken place in the same week when I've opened up different products to take advantage of hacks. But my situation at that time, well, I had a very, very, very good credit score right at the top. So it dip, even for like a few months, for a year, wouldn't make much of a difference because it's not going to be so substantial that it would massively impact me. But also, I didn't have anything important coming along that would maybe, get put at risk. So you can do it, but just be aware of what could happen there. Now, the credit reference agency Experian, remember, so there are 3 of them, but Experian say maybe do it every 3 months you apply for something. So that would be, in the case of just thinking about bank switching alone, and that was all you were applying for in a year, well, you could do 4 of those in a year, which is still pretty healthy, right? And the number of deals that come and go, that's probably going to be fine for most people. So that's kind of a good rule of thumb. It is not it's a rule of thumb rather than a kind of actual hard fact. You might be still, if we pace them out, might still have an impact, but it's worth thinking about doing that if you can. There are a couple of other reasons as well when opening a current account could have an impact on your credit score, even if you're just applying for one of them, or a larger impact on your credit score. One of them is if you apply for an overdraft as part of that application. Most of the time you actually have to actively say you want to do that. Well, obviously, an overdraft is a debt, but a very expensive debt at that, often at 40%. So if you are applying for that overdraft as well, then that is suddenly going to appear that you have the access to this credit as well. And if you use it again, that also can have an impact on you. So if you don't need an overdraft, it's probably worth avoiding that application, that part of the process. And incidentally, when I said that most bank accounts will do a hard search, and there are some that do a soft search, if you apply for an overdraft in those banks which do a soft search, well, then suddenly it becomes a hard search. So an overdraft is always going to result in a hard search on your credit file. And the other quick one to worth mentioning here before we go into about switching is if you are opening up a joint account, because when you open up a joint account with someone, it's not just your credit report that suddenly comes into play when you apply for other things in the future. You will be financially linked. So whatever the state of your the other person's credit report is, when you apply for a joint account, it becomes kind of joined up together. So they will see if that person has an awful credit score for whatever reason, there's information in there, there's debts, there's all counter court judgments, whatever it might be. Well, that is going to have an impact on you being able to get stuff as well, and vice versa. So if you're the person who has the poor report and your partner or whoever it is, sibling, who you're opening an account with, has a sterling one, suddenly theirs is going to drop down. So it's really important to be aware of that as well. So that just opened up a current account in the first place for whatever reason. Okay, that does have an impact. Let's talk about switching explicitly here, because this has additional potential impacts to your credit score that you need to be aware of. The big one here is when you switch as part of the current account switching process, which most of the time you need to do this in order to get those cash bonuses, the account that you're switching from, your existing account, will be closed pretty much every time that is going to happen. Now, this is the closing of the old account, which also has an impact on your credit report, because one of the big sort of strict signals on a credit report, which lenders like to see, is longevity and loyalty. Now, if you are switching away from a current account that you've had for 5, 10, 15, 20 years, however long it is, suddenly that is gone. That's disappeared. And that will see quite a significant drop in your score, again, as an indicator of that change to what's in your credit report and credit file. So I personally, and I've spoken about this with you guys a number of times, if you've got a long-held current account, I would not use that to switch. But that's fine, because you can open up dummy current accounts, as I've covered before, which, yes, in the most cases, when you open up that dummy account, there will be a credit check in order to get that one. So you need to bear in mind how many of these you do in a short space of time on the most part. But then that dummy account can be opened and you can use that one to switch into another account to get the free cash. And again, maybe that one that you've switched into, you can use that one again to switch, but you're keeping, even if you're not using it day to day, maybe it's just, sitting there, it's dead, but it still exists. And that means you've still got that history, that long history on your credit report, which is really, really important. Now, I have obviously covered in detail about dummy current accounts, and so please do check out that information for more information, particularly about some dummy current accounts you can open up, which will have a soft credit check. And I think that is really vital here. You open up these soft accounts potentially and use them for switching, so you avoid that potential risk there of having an extra hard search on your credit report before you open up the account you want to switch to. So again, reduces that impact on your credit file. So there you go. Pretty simple, really. I would say the things to remember are that if you are going to open up a new current account or going to switch into a new current account, the big things to consider are, do you have any other kind of big applications on the horizon? If so, maybe hold back. If you have a lowish credit score as well and you are trying to build it up, again, maybe not trying to have too many of these applications happen in the same space of time. And also, finally, if you are going to switch over, and this is the big one again, don't do it from a long-held account. Use a dummy account instead, and that will mean you keep that longevity on your credit report. My name is Andy Webb. Thank you so much for watching. Check out these videos for more on bank switching.